Okay, so I created this template using this indicator that somebody published a long time ago. I'm assuming called Timebox. And I could post a code to this thing. This is the Timebox from 2009. Gecko. I don't know if that's the Geico insurance people, but common inputs. Now, what here? I chose Olive for all the time frames. I mean, for all the data, so to speak. You can make this an up and down color, but I really don't think that's a good idea. Because now you think, oh, bullish 1 hour, bearish. I had set it to 1 hour, the time box. And to me, this is harebrained stuff. Oh, it's bullish, it's bearish. Now you're thinking direction, which is bad. I think, because you should be very objective. Shouldn't have a bias at all. Sure, we could say it's going up, I'm going to be a buyer, and I'm going to buy on a pullback bar. It's down, the color's there. But in this instance, it's about the time frame overlays. I'm using the 60 minutes to say, okay, that's 60 minutes. I mean, this is really sounds like stating the obvious, which unfortunately, trading is so dumb that you have to state the obvious. So for olive colored boxes, there will be a 60-minute passage of time. Now, the best part about, and I have 10 pip grids, so this is like 10 pips an hour kind of theory of life. So if you were in a standard lot and the market was moving 10 pips an hour, you'd be making $100 an hour. So when you get into these trades trying to make 10 pips and the spread's 2, you're paying 20% shipping and handling if you're right in that window. But you don't mind paying 20%. In other words, you bought something on Amazon for $10, it costs $2 to ship it. At what point do you say, it's just not worth it? I'm not paying fucking... If the spread's 5, the shipping's 5, and your target is $7, you're making $2. Okay, you're still making money. Like if you were to come in on Amazon and be one of these big buyers, you would still make that. So here, the 1 hour chart, the olive boxes is passage of 1 hour. So it's a different view. I'm just talking about the volatility in 1 hour. This indicator gives you an instant graphic with a 10 pip grid behind it. Hopefully you can discover that the market moved in a range. Whether it moved up or down is not the point. It actually, so another thing is this dotted line is the end of the day. So on this chart alone here, there's so much going on. So I'm just going to run through what I see from a volatility standpoint. This is nothing about smoothing this out. I'm just going to go bar by bar. And the thing that I'm going to do, and I'm not trying not to say, oh, nobody else says what I'm going to do here, is that, yeah, I'm going to say that because nobody has a trade plan for what I'm about to show you. what I'm in the process of showing you. It's so funny, all these cliche catchphrases that people use when they're presenting. I guess that's what I'm making fun of when people show people how to trade. And they get the Fibonacci thing out. And it's just so corny because it's like, yeah, I get that you're trying to buy a pullback. And the whole point of Fibonacci is not that that is the golden ratio. It's that it is a ratio. And it's something to say, I'm not going to overpay for this thing. I know it's going up. I'm just going to buy it on a pullback. So this is a fancy way of saying I'm buying at a better price. I'm buying lower. So if I had a 10 pip grid, if I had a button I could press that lays out orders, now I'm just going to jump into limit orders, which has nothing to do with breakout trading. So unfortunately, because I just want to go through that and take a sidetrack here, I'm going to get out my drawing tool and go through that. They redid the drawing tool here, so it does all these inappropriate things now. But as far as trading it, right, and I'm just saying that the thought came up because I do have that trade plan available where even though the market's going up right now, this is the close of the British pound on the 15-minute chart inside of 1 hour boxes. So this is 1 hour. The market hasn't done shit. Now, from some people that want to trade with a 10 pip stop, I'm going to jump back to I'm going to let go of that limit thing. Because I want to go through this, okay, this is the problem. I just see so much on here. I can't even think straight. If all you were looking for, here's your criteria, here's a trade plan. The market hasn't moved more than 15 pips in an hour. So what I'm going to do is to make a pure confirmation entry. This is, I think, the starting basis of most trading. Like if you had to show somebody the take home trade plan, look for a small 1 hour session, place a buy stop above the high, a sell stop below the low, and walk away. Now that doesn't give you the exit, but it gives you kind of a clunky mechanical trading system. So here, let me start at the left side of the chart. With that in mind, now I'm looking for a 15 pip bar. I know it's a 10 pip grid, but you can't put a 15 pip grid up. We'll even say, how about a 1 hour session? Now, it is the British pound. You got to take this into consideration. This trade plan isn't going to work on a different currency with a different spread because the shipping and handling on each bar is going to be completely different. So don't think that, well, you know, if you have the 20 pip target trade plan and the 50 pip target trade plan, that's really what you're doing. You say, I have a trade plan where I can risk 20 to make 50. Now I can put the 20 pip grid up, or I can just count two of these. So, you know, my series of army bots there would be a 11 pip 1 hour bot, a 12 pip 1 hour bot, and these bots start to throw their tickets out. This is actually a pure confirmation bot that I'm talking about. The very left side of the chart here, we have a small bar. Now, if we put a buy stop here and a sell stop here, it's not to say that you didn't put a break even here, which isn't really break even if your spread's 2. You'd have to make 12 pips to make your 10. You're risking, you know, more than 10. If you have a 10 pip stop, you're risking 12. So, you know, it's not like people think, because the closer you get to this 2 pip spread or this 1 pip spread, whatever the shipping and handling is, right, so that you need different entry techniques than just the goober entry. This what I'm showing here is the classic just trailing stop entry. Now in the big bar, in a perfect world, you put a buy stop here, you put your protection here, there's sell stop, or you're going to sell more here. And Bill Williams' theory, which is valid, that you just double up and go the other way. Here, there is no trade in this bar because it's over 20 pips. But the smaller the bar, the tighter the bigger you trade, and the more it costs you in a way, right? See, but the probability goes up. So there's this whole balancing act between the probability the cost of the trade, because now I'm going to jump to limit entry. Regardless of what's going on here and how this is the perfect, like, every time this gets smaller, the robots and you are putting in sell stops and buy stops, and nothing triggers on the top side. And here it cascades down. Now, unbeknownst to you, because all you are is a breakout trader, you're like, man, this is making money. I can't believe it. Plus, I put a buy stop here, a sell stop here, and I added to a winner. It's crazy. It's making money. It's making money. Now, Asia comes. It's dead for the first hour. The breakout trader bots sees this because this is a 5 pip for 1 hour. That is a major heavy entry. Plus, and now I'm going to jump to the limit people. The people that have limit orders in this vacuum stacked up, and they are going against this guy who's getting in on confirmation. Right? What they would call the market maker entry. The guy's buying this whole. Right? Is he making money? Yes, because when they fill his hole, which is 10 fucking pips, people. I mean, this you cannot just say, oh, it's gonna. You cannot be this empowered trading goof that's gonna buy. Well, we're buying here because it's 618. Okay, that's great. You got filled on that one. But what if you buy here with a stop that's too tight? Or so the problem is the volatility. So there's no robot that I have that's going to come in and say, put a buy stop here and put a sell stop here in this big bar. Not that it's not a good trade if you look at this move and say, well, yeah, because, what are you talking about? I back tested this, and this is where the back testing rabbit hole is just, you never want to go there. Because if you said, well, my baseline says we're going up, so I'm going to put, I don't even care how big this bar is. I just have a buy stop here that's trailing. I'm not even looking at the size of that bar. Like, in other words, my baseline says we're up, so I have trailing buy stop, buy stop, buy stop. I got filled, right? And I got filled again, but to me, this is, there's a problem when there's that much volatility and you're going to put a buy stop here. Yeah. And I can tell you, back testing that, I mean, this is the argument for, well, you got to check your ATRs before you get in the airplane. You can't just get in no trade. Now, if you have trailing buy stops here, to this guy, none of this matters. You're a turtle trader at that point. Every hour you're just like, got to buy stop here, got to buy stop here. Some girl I went on the Forex Factory, I was curious to see what people were saying about the Euro move, which is just like this move here. Same thing happened in the British pound, happened in Euro. We all knew this was going to happen. I guess not all of us knew that, but we knew there was a big hole there. We knew if we ever took this out, like Katie bar the door, right? And it was a big deal. And this was the big stop hunt, right? So this is your classic. Here's Asia breakout, a little bit of action, but no, got to come back and clean out this area. So I'm jumping around again, but it's like I can't just, well, let's just say what's really going on here at some degree. But I'm saying from the robot's view, from a person that's going to trade based on strict criteria, and it's kind of a lot of work. This is a 1 hour chart in essence, even though I have a 15-minute candles inside of 1 hour bars. The fact that we've cordoned off this 1 hour makes it simple to digest the data on an hour by hour basis. And if you could look at your screen, you don't have to look at it every hour. I guess you could. I mean, I do. So I know what's going on because I don't want to miss a trade. And the fear of missing out is, it's there for a reason. So let me just drill down to another thing here I'm saying is that if we look at just the 15-minute bars, now if a 15-minute robot, a doji bot, was looking at these cute 5 dojis here, like it's amazing, right? It's a triangle, it's this, it's that, but unbeknownst to, so the end of the 15-minute bot looks at that, or you are that bot. And you're like, wow, what a setup. It pulled back to this top. This was the Asian price. We're right in this 10 pip window that everybody's all giddy about this price. And I'm just going to say this is a 10 pip pivot window. But you broke out above. Don't forget, the guys that are trading the 8-hour breakouts, they're trapped. How do you know? Well, if they put a buy stop here, they got triggered in the 10 pip window, and then they pulled it back 10 pips, and they're like, oh, fuck, So at some point, that person realizes, or maybe they never do, that maybe the buyer who bought here on this, where's the best place to get in? Here. There's a bunch of people trading this, okay? But there's a guy out there that maybe bought here, and he's going to put in his stop. He's putting his trailing stop in to protect that position. So he puts a stop in here, puts a stop. Where does he get stopped out? There. In a 10 pip, because he ran too tight of a stop. Now, if his stop drifted, say some money management bot comes in and keeps saying, well, we're only going to move it this much. We're not going to tighten it up on every fucking bar because we don't want to get this could be called a fake breakout, right, to the downside. So yeah, the blind bot who's trading that is going to get trapped in that. And this is, you don't have to back test this to realize that this is the flaw. Otherwise, your back test would be premium, every trade wins. There's no such thing. These guys that are writing these algos are just skimming. They're lucky. It's like they went fishing and they don't even have a fucking hook. They have no line. They're just like, oh, honey, look, there's a dead fish, grab it. Yeah, I get that you came home with fish, but there's so much going on in this chart in one day. There's so many trade plans. There's so many approaches. You could be a swing trader and you just got filled on all your sells here. Now, let's not be ridiculous. You can't sell into this thing without looking left because vacuums leave clues. If this currency's never been above this price and it starts to go up here, really be very careful selling into this because you don't even have a clue. Like once it get past here, it could get heated up. You can't step in front of this and just lay 10 pip apart grids that are 40 standard lots. You got to live inside of what's going on an hourly basis, right? So every hour, it seems like a long time if you're on the 1 minute chart. And I could go to the 1 minute chart and just bring the box down here. So another thing is that if you have this 1 hour perspective of what the range is per hour, you're not going to, even though this is a good trade, you could put a buy stop here and a sell stop here and say, I don't know what you're talking about. I'm turtle trading this thing. I'm making money. What are you talking about? Okay, it's all fun and games till you put a buy stop here, right? And then you get trapped here and then you get raped. Okay, so you can't just say stuff like that. Now you could say, if you know what an inside bar is, it's a bar that is smaller than the previous bar. On the 1 hour chart, we could start putting in, this is a little bit smarter money trading. Put a buy stop here, inside bar, buy sell. Another kind of inside bar. Here's another inside bar, buy stop, sell stop. Now, here's another one. It's kind of inside actually. This one. After this, it's too late. I'm not going to chase that. If I didn't get in here, I'm not chasing that. If anything, I would be throwing out my psycho limits, and yeah, they would be up here in the 10 handles, but not. Okay, you can't sell 2 million here and $500,000 here and 250 here because you're running out of margin or you're running out of money. You have to sell your 10K, your 20K, your 30K, and ride the 30K back to here. So you're slightly in the trade, even though this trade is eventually a winner if you wait for them to crush it back into this hole here. So the people that bought this on limits, they bought this 10 pip slot because on the 4-hour chart, or just, there's a big, this is just what happened fractally on the 4-hour euro. The market falls, gets that hole, it's trapped. Now the sellers are supposed to come in here if bottoms become tops. Now I'm going to go to if bottoms become tops. So, and why does a top become a bottom in the first place? So if this is a top and you take it out, right, the confirmation people are going to buy the pullback into that, but it overshoots it primarily because of this. So this big giant 20 pip buying window, this is the original floor that is supposed to be resistance, right? This support should become resistance. So it breaks out. I mean, don't think these people weren't just saying, oh my God, what a great place to get in. We waited for our signal. For whatever reason you think this is going down, and you're up 20 pips on this trade. And that 10 pip wick, so here, the people that have orders in this pocket, the limit people, they actually get filled in 15 minutes. They are up. In 1 hour, they are up in that trade all the way to where the sellers are supposed to come in and take this down. And this is supposed to be a continuous, right? This is supposed to be continuation theory. These are all theories, people. These guys that know nonsense, these are all theoretical things they're talking about. Now saying, oh no, there's auction theory. No, there's no such thing. No, it's just a house cleaning. It's just one of these things. And even this guy made like 15 pips. Don't forget, the guy that sold here, and it's just a thick, it's not 100 pips there. It's just a thicker line because of the way the computer's doing the math here. But selling here, this is about, and then riding it back to here is like 12 pips. So 10 pips after the spread. Then all this chatter up here, right? Every time it pops above here, people sell it. Now, so this is completely going against the fact that, well, you should be long, it's going up. So people that are range trading that, I'm just going to describe all the people that are trading this, there's a lot of different smart money. There's not just one trade, especially for the time frame that you want to be in the market. You only want to be in the market for 2 hours. You can see all the trades on here that only last about an hour. You're selling this new high. Okay. Then after an hour, you made your 15 pips. You sell a new high. You got to wait this hour, right? You've got to wait for that hour. But you made 20 to 30 pips on that one. If you keep selling this, now this is very counterintuitive or counter-logical for some people. But yeah, selling above this, you have to know that once you take this out, look out, because this is going to scream into this area. And why is it doing that? All you gotta do is change the time frame. Or zoom out. So I'll zoom out till we discover the cause for the velocity. And you can see it really has to do with this, the high of this day. And here. So here the sellers start coming in here. We never make it to here, just like we never made it to there on the euro. So this was the seller's window. This is the place to get out. And both this and the my time box only goes back to here, apparently so many days back. So that is the cause. I I got to go to the half-hour chart here. So the time box is going to kind of disappear. Okay, so in the big landscape, that 10 pip grid's still there. This stuff's getting in the way of my. So this maximum zoom out, 10 pip grid. Now here is the infamous what do you call it? Brexit or the conservative vote, and gaps on the chart there, and pretty astounding, right? And so all these kind of claims about tops become bottoms and stuff like that. Yeah, you could say, you know what, this people did come in and buy that for a little bit, but it came into this. So once things get crazy like this gap, you just can't trade it like I can say, like, okay, if you think this is an uptrend because you got this 20 EMA, you could see buying here as a complete disaster. You would immediately never have to backtest that or backtest anything in a sense because of these kind of flaws. You know that there's anything that's curve fitted, anything that's hard written in stone, any algo that you have, it's going to get crushed at some point when the market doesn't move at the same rate that you wrote your moving average. Because the guy that sells here, or the guy whose system has a faster moving average, he's trading this thing all the way down. And then he's getting killed when he's short during this, say. He's like, oh yeah, can't you see it's going down? And so at some point here, the guy with a 200 moving average baseline says, oh, I bought here, I made this, but yeah, you got to be aware that this is the bottom that's going to become a top now. And the problem is the dynamic range of this is constantly changing. The sellers were supposed to come in here, and they did. It took back a little bit, but guess what? There's too much fuel here, and then this big giant hole we left behind, and this is the big hole, is when this thing punched down to here. Now, I bet people could not believe this pullback. So this is the buy the rumor, sell the fact one. This guy gets voted in office. Of course, could this have anything to do with it? Once that's filled, right? So what's really going on? And like, I'm sure people were like, oh, I'll sell up there. I don't think you got filled there. You're going to wait a couple minutes, but pretty dramatic stuff. And I'm sure people made money and lost money on this trade like you can't believe. I'm sure people that have never traded, they just started trading right into this thing, and they're like, vote schmote. I don't care. I'm just going to trade. Either they made a bunch of money, or they didn't, or they didn't even trade it. They just saw it and they go, well, that's kind of fucked. How's that going to... I put an algo on that. But see, here's the algo, so to speak. This. Once you went above that, man, this is hell to pay. Actually, this whole thing here, like, okay, so who wasn't long already? And when it pulled back here, it was pulling back almost to this structure. Then pow. Then we come back and carve. Then we actually come back and go through that. Oh, that's the 4-hour chart. Come through that. So yeah, all this stuff exists, and you could say, oh, I made so much money here, and you probably did. If you had a 20 EMA that was selling stochastics, fast stochastics overbought, It's pulling the trigger here, it's selling here, it's selling here. This is how people sell courses. They're like, dude, this thing makes so much. Yeah, I know, but it doesn't here. Because if it tries to do the same thing here, this could be a problem. It buys here, it's oversold. So this is why the no-nonsense guys look, that RSI don't work. Yeah, I know, because you bought oversold here, but it went more oversold. Then you bought oversold. Actually, this was a good entry. Oversold. Here you bought oversold, and here you're just getting crushed. And do you have enough money to buy this oversold and this oversold? And even if you do, are you expecting this? Well, you would if you saw this and you saw this. You'd be like, oh, yeah, there's hell to pay. Now, we don't know how much lower we have to go to pick up the hell to pay people. Because you would have thought here, oh, you made a new low, buyers come in, they cannot defend this floor. We have to go after this area. Okay, great, we hit it. But then look at this pullback. Now, I would say for a lot of people, they'd say, well, fuck, I got a trend line on here, and it's just, what the hell is this? It's the same thing as this. So when that happens, and it's going to happen because if this low exists, you know there's going to be a fill there. We never even make it back. This one wick, for a second, you almost make it back to here. But this never makes it back. This is the only so-called counter trend trade here, if you think this is the trend. But you can't even think like that because there's some other guy that sold this trap, and he's like, yeah, wait till they take this shit out, and then he's going to buy here. So there could be somebody range trading that around you, up and down, just range trading it. And you're holding a short position. And, you could be on paper making the exact same amount of money. You would never agree on that trade. You'd be like, I can't believe you're buying here. I'm short. Yeah, I know, but I'm going to get out when it gets to here. So this is a 4-hour chart. And so I guess, I don't know if that helps because all these trades I'm describing here are really swing trader trades and people that don't mind going underwater to make a lot of money later on. So if you buy like a bunch of houses in the bad side of town down here, if you hold them long enough, right, you look like a genius here, right? If you bought here, in the most fantastical trading, or you bought this double bottom here, and you got out here, and you're like, yeah, that is the trade, because here now it's going to be, and this is real world, is that you're at the mercy of the next volatility level. If you have trade plans for this nonsense, then sure, this is the ultimate trade. Like, we rarely see these gushing moves, and it's only because it's gushing into these holes. Like, look at this plunge. Look at the velocity of that. And this is the big floor to defend for the bears. But then they take that out, and they just smash it. You end up with the auctions within auctions because you're only as good as your last auction, so to speak. So you had this big hole fills, comes ripping up. Now there'll be sellers up here, and there'll be buyers below. So the trick is to get your order density in sync with what's going on. If I zoom in on the 15-minute chart to the point where I can actually see what 1 hour looks like. So that's kind of like a look at all of the wonderful trades there. But what do you do about now? And what do you do about the last few days here now? Look at this smash. Look at this thing just, I don't know if I'm missing data there. Oh, I'm sorry, that's a Christmas thing. So, yeah, I don't know what this broker did during Christmas. But that looks like some fallout from that. Once again, I think if you bought, I think you can see it probably got filled here. If you had limits, I don't know what the spread was here. Maybe it got bad. You bought this whole thing. And when it opened here, you're like, oh, thank God. And then you could have cashed out here, right? Granted, you could have sold into that. And selling into that became a winner. But on an hour-to-hour basis, it would be a lot of work to say, well, I got my buy stop stacking up here, and I broke out. Let me make a little bit of money there. So this breakout mechanical trading is not the end-all be-all of trading. I don't think it's the only way to trade, because I don't think it's just not enough trades in it. And instead, the shipping and handling, the spread, and the commissions is going to get in your way. So on the 5-minute chart, we still have the 1 hour box. So here you can see clearly that if you put a buy stop here because you think, oh, well, it's small, it's about 15 pip bar, my system says, and this is just the clunky blind system. You're long, and here you get trapped short, but then here you're long again, and you don't put any more trades on. You're long 2 contracts, you got stopped out of 1 maybe. So you're long 1. And contracts, it's like commodities. So here you do not put a buy stop, a sell stop, because it's too much risk. And here you start to do it again, and you get filled long, and you're long, and you do pretty good that day. But at some point, you're going to have to say, well, that's wonderful, but what if I was to buy here on trailing buy limits? What is that I was to buy here? And when it comes back to here, this low here, I can see, oh, you know what? That's my first 20 pips. Now waiting for a pullback, and maybe this is some 618 bullshit. But see now the fractal. In other words, the 5-minute chart on top of this 1 hour thing, if this is a top, you can see it pull back into, on closing prices, it actually closed on the 15-minute there. So this is a top become a bottom in time inside this structure, this 1 hour bar. Here's another pullback. Top become a bottom in time. That trade is not available to a breakout trader. This is a market order trader, or this is somebody that is just running trailing buy limits. So if you press a button and it just runs trailing buy limits that go 5 to 20 pips deep, you just get filled naturally here when the market climaxes. So the moment it is up like that, if I press a button that throws in buy limits, which I would do, because anytime I see the market rally like that, I'm like putting in shallow buy limits. I don't want to put a buy stop here and overpay. So the limits are a cheaper way to exploit that pullback stop hunt. Like here, if you had buy limits in here, okay, you made a little bit of money just by sell limits up in this pocket here, right? You made a little bit of money. You're going against the breakout traders. Well, so how is everybody making money? Yeah, because this guy only steps in when he sees an inside bar and a small volatility. So he has 2 filters. This is the idea of all these filters people are trying to put on here. But then you're going to miss some of the other trades here. Now, in this 5-minute chart on top of the 1 hour box, I'm going to go to the line chart now. So this is going to reveal the hidden secret of price over time and kind of like trend trading, I suppose. Overbought, oversold. So this is overbought, oversold, blatantly in your face, just like RSI. and this is the big reveal for me, is when I said, well, you know what? I'm going to accept that during this 1 hour, there was insanity. But what really happened? What really happened? In a snapshot of time, price over time, 5-minute chart, tops become bottoms. Double bottoms you can see here now. You can't see double bottoms in the candlestick. I'm sorry. This double bottom here, there's a double bottom right here. And that is not, you can't see it unless you go to the line chart. So we see in a 10 pip window here, we got this cluster becomes the double bottom. This top becomes a bottom in time. Here's a double bottom on the 5. Kind of a double bottom. Another breakout, pullback in time. Here's the big controversy. People keep feeding off this 10-yard line on close. They keep buying. They make their 10, 20 pips, keep buying, buying, buying. Now, has it flipped? Is this the bottom becoming a top now? Should you have sold here on close? I guess you could have. But it doesn't mean that it can't power through this or even come back here for 10 and keep going. So on this 5-minute chart, though, keep that in mind. That so you may say, well, RSI probably gave you a 2-period divergence here on this 5-minute chart, and it's in this trap zone. And look at this nice 10 minutes you made. You made like every 5 minutes you made 10 pips there. 10 minutes you made 10 pips, a pip a minute. So this double top here, you could even probably track down some kind of divergence here. Here's a channel. That's the end of a channel. Comes back here. So it tells a story of price over time here. Double top becomes a bottom, kind of stairway here. Kind of lame pullbacks. You're just buying because it's a weak pullback. I'm sure this is more oversold than this one. So here's a reversal in RSI. RSI is going to be more oversold here. Anytime it moves like this, very oversold at a higher price. So this is the last of the trend traders. Trend traders are waiting for this pullback. They want to see a dramatic pullback. Get in there at the market because, putting the buy stop here, you're going to overpay, even though you're going to tell me I back tested it, I'm right. Look, it's making money. Here's a double bottom underneath here. And then the sellers do come in there, right? Like amazing, right? This bottom becomes a top right at the 10-yard line just for a little bit. Consolidation, and then, sure, buy stop here would have worked, but you really want to be buying here before the stop. So if you're going to run limit orders, stop orders, market orders, they have a time and place. Of course, the timing is the market order. That's a true timer's trade. A price trade is a guy that says, hey, man, I'm not going to pay this price, but if it ever comes back here, I'm just going to put a limit order in. That guy he doesn't care anything about what time of day it is and he's not watching that. The guy that trades at the market is going to look at the market and say, oh, it's up, sell. Like I'm selling right here because this, and it's up. I sell when it's up. That's what we do if we're bears. If it's up, we're looking for that pull up or pull back. So all these people, and of course, it would matter to how heavy you're going to trade on the stuff. So nobody's going to be able to, the big missing link, all the stuff that people are showing people, oh, do this, do that. They're never talking about how much it would cost to actually do that trade. So if it costs you $200 in commissions to make $1,000. Let's just say the spread is commissions. Would you do that trade? A lot of people say, "Yeah, I'll make $800 a day." I know it's costing me $200, but I'm making $800 a day. I just got to be right about these trades. Then that's when people would say, "Well, we got to make sure we backtest this because I want to be right." So therefore, that. But if the number $200 is built upon 201Ks, that's completely different, or 101Ks. It's completely different than a standard lot where you need to be right by $200. It costs you $200 to have a $100,000 position. I'm sorry, $20 or whatever that number, whatever you're trying to make. In other words, it's 20%. You would say, well, I don't know, let's take that down to $20. Okay, you're doing 10K with a 20 pip stop. A lot better, right? And so there is a point where some people will not trade a 1K because they don't see. I went into this Discord thing. This guy was in there, and he laughed at that the peanut deniers. Oh, yeah, it's $2, dude. I got 1,000 of those things in there. It's just like, it doesn't matter. I mean, sure, if you really are that good at trading, then you should be trading a million. Like, if that's right, that you're right about the trade, then why is there a limit the other way? If a peanut is too small, then how about a boulder, or would you prefer like a planet? How about Jupiter, right? So yeah, you're gonna try to balance Jupiter on your head or something. It's your circus act. You only do it a couple of times a year, but it makes so much money. People I gotta see this guy with the Jupiter on his head. But for the most part, the market's not even presenting Jupiters. I mean, there's no. A lot of this is. If every week you're trying to make 50 pips a week, now attach a number to that. Is that $50 or is that $500? And is that okay? Or do you need to make $16,000 a day? And if you do, you need to go through that math, and you would see how much it costs you to make that much money. It may cost you. And you got to make up that cost at the end of the day. To make that 16 grand, it can cost you $400. That's nothing, percentage-wise, right? But if you told somebody how much it cost to run your trading thing? Well, $1,000 a day was cost. Wow, what the fuck? Who'd you hire? That's just that's just getting stop hunted. Losing 20% of my position because I'm scalping around a trend or a swing, or I'm just scalping and I just keep getting stopped out. And then I'm like, I'm too close to the market. And of course, this is when you would lose money because I guess the fear of missing out's against you there, because now you're over trading. There's a difference there between fear of missing out. Over trading it is taking advantage of every move in the market. So now your shipping and handling is 50%. Like, you just can't do it. So it's a session thing. You're waiting for London Open, you're waiting for US Open, you're waiting for US close. If you're waiting for the end of the day like these no-nonsense people, okay, I think they're getting in the wrong direction at the end of the day. If they would just invert their entry, I think they'd make more money. But the no-nonsense way is that it's all about confirmation and make sure that this thing's going up. It's funny that the gold people, so this guy in my band, he says, yep, I'm buying gold because inflation's coming. I go, okay, it's not that he's wrong, but when people I know that don't really talk about the market talk about these trends, and I don't know if you noticed this thing that came out, it was that the institutional or the experts, the experts, like Paul Krugman, these guys are saying, oh, it's never been, we're bullish on the future, right? So also, the man on the street thinks that everything's good with the economy. So in a contrarian world, that is supposed to be the biggest sell signal on the planet because everybody agrees. And there's really nobody on the other side of that trade, and everybody's going to look at everybody. It's the burning match thing, last guy holding the match. So everybody agrees in that trade, that what could possibly go wrong. So that's what I'm talking now about. And this is not anything definable like on this chart. Are these things that you say, God, really? In a fundamental view, as you look around you in the price of gas. So I'm sitting at the Starbucks yesterday, and I look over at the gas station. Now we got a gas station that has the lowest prices, I think, in the whole area. And as I'm having coffee, you can sometimes see the price change. Well, it's up 30 cents. I mean, in one day. I'm like, what in the fuck? Now, this is when I'm in the Euro trade, and I thought, well, the dollar is getting clobbered. But I looked at crude oil, and crude oil was barely moving, and I thought, I'm just being like, I don't have a unleaded gas chart of futures spliced together, a continuous chart. Like, I don't know. But I'm like, what? Where's this price coming from? Like, kind of look at crude. Crude's not really that bad. It's up a little bit. But it's funny how it hits you, and then you'd start to take this into your trading chart and say, well, fundamentally this and that, and this shouldn't be happening. So we've all been through this. Why is this? So my dad said to me, why is the market going up? It doesn't make sense. I said, well, it does fundamentally if you think about deregulation and think about just flow of money and inflation, or just stuff. There's no resistance now. So, but people want to know why stuff's happening. So the stock market's melting up right now, and it looks like there is this kind of inflationary thing, but of course, it's being absorbed right now. The move has already happened. So when people are chasing this stuff, this is where the chase comes in. And the confirmation people really get burned. Sure, gold could be on its way to 1,800 for God's sakes. But I guarantee you there's sellers galore up there. And you could still tread water, like this chart here at the end of the day. And just people getting killed trying to jump on that train. Not killed, but getting death of 1,000 cuts. So in the end, it's about saying, am I trying to make 10 or 20, 30 pips? How long should it take me to make that? Is it going to take a week to make 20 pips? No, that's not hard to do. If you put a 100 pips stop with a 30 pip take profit, and you trade the daily charts, and you're waiting 5 days to get paid, you should be able to make that 20 pips. I mean, now this is also considering more than one entry. So everything I talk about is based on multiple entries. There's no way I can imagine anybody, and of course it just falls apart on its face, because if you're going to get into precision entry, then you're going to obviously get into bigger than a 1K. And if that's the case, then what is that number? And how many of those trades can you do a week? Because not every trade is going to be a winner. They're going to stop you out on, especially if you have a 13 pip stop, you're probably going to get stopped out. You're not a person that's building a position and trying to build it and dump it. So I like to just build it and dump it. When we get to the window, I think it's the exit window, which is the reversal window for people to go the other way. Or am I going to just snag, canvas an area, and when the market plunges and retraces, my 22 pip and my 13 pip and my 40 pip targets are hit, and that trade's over. Wait for the next session. Having trade plans for a quiet market Market's dead. What's it doing? It's about to break out. Is it going to go up or down? Building a position at the market is the only way I can see that. Building a position on limits and stops, maybe. In other words, getting into something a little bit incrementally, and of course it could go against you, but then it's going to take you out of your, and this is another thing, is more robust to have different levels of stops. They could crush your whole position of your scalps and still leave you with your swing trades. And even though you're only in half the position you were before, and you're thinking, man, if I was only in the original size position, this would be an amazing trade. Unfortunately, you're going to have to rebuild that and maybe actually go in deeper. Not something people are willing to do most typically, because if you own say a store and it's like, okay, you open it up and it's not making money, and how many times are you going to reopen that store? When you open it the third time and you start making money, you're going to make a lot of money because you've already taken care of whatever. But the market, of course, you're kind of at the mercy of somebody else's business here. So here you're actually trying to find a business that's going to be successful. If you're looking at all these currency pairs, you're looking for something that's going to, that trade plan is that market's ripe for that trade plan. So this could be a 100 pip grid, and this could be a monthly chart. And in that case, you may wait 3 months to make any money. So also, what is your timeline for, how much patience do you have really to, I guess you have to be realistic about your timeline for the patient thing is not that bad, because since you can't be awake 24 hours, some of this is going to have to be, I'm saying if you're trying to make money every week trading, you're going to have to put orders out there that are limit orders, because you can't just be awake for some of these entries that are good prices. When you look at this, when people backtest too, I don't think they can take in consideration that, well, maybe on the daily charts they could, because they say, oh, this is daily backtest, I can make it here. But you'd be surprised, people that don't trade a lot, 3 days go by, they don't look at the charts. So that's another thing, is this end of the day ritual. You look at the chart and you say, is there a trade or not? So that's the checklist traders, right? Or did they fill my limit? I put a limit in there. Look, they picked me up. It's crazy. Now, if you drill down on the 5-minute chart, because you want to see, well, what's going on there? Well, your head might explode, because you'd be like, oh, shit, I could have got out there. And just made that a scalp, because that's such a big ticket. So the size of these tickets definitely matters. Trading a 2K, a 3K, a 4K like that, this is going to be, okay, you don't have to put as many tickets in. But then you might miss that one, and the fear of missing out, it's a real thing. Like I said, I have a fear of heights for a reason. I also have a fear of jumping out of a plane. So you'd kind of want to say, well, let's put in denser tickets in there, and because we don't know if we're going to capture, we're not going to get the pullback we want. We might have to chase it at the market a little bit. So having the flexibility of saying, I got a market order with an 8 pip stop, I got a market order with a 50 pip stop, I got a limit order with a 10 pip stop, and a limit order with a 50 pip stop, and I've got a buy stop with a 50 pip stop, and a buy stop with a 10 pip stop, whatever that is. But to have right there, you've already passed the no nonsense world, because now you're dealing in reality world, true reality trading, because the markets can give you 80 pips in 2 hours, certain currency pairs. And that's an amazing trade. Of course, getting all your, focusing on just that one trade is what people are going to try to do when you don't know which market's about to explode. So any market that's going sideways has a potential to explode. in either direction. You could have non-directional trade plans. You could have hedge things. You could buy and sell at the market, depending on which brokers let you do. Buy and sell at the market with completely symmetrical targets and all that stuff. And you can just, the beauty of it is you can just take a demo account and test all that stuff while you're still trading real money. So I think the ultimate is to trade fake money and real money, or not even, you don't have to trade fake money, but you could look at the chart and imagine the trade. Hopefully you have imagination a little bit to imagine what it would be like to be in the pound, even though you're not trading it. You're trading the euro because it's not as insane. I'm trading it because it's not as insane when the pound is beyond my trade plan. I don't have a lot of 160 pip stop tickets that I wrote because I figure, well, at 160 pips, hopefully I can make 40 pips with a 20 pip stop, or I can make, with a 15 pip stop, I can make 30 pips. I'd rather do that trade because it's over with and I've made my money. 160 pip stop is saying, wow, I better be like a little tighter on the next stop. I would have like 80 pips. And if you have these wide stops, right, you could still have the 20 pip take profit. But we've seen markets that never move 10 pips counter trend. Like if you try to sell into things that are just going in one direction all day, yeah, you have to wait. You got to wait for that trade to come back in 2 days now. So the back testing that people do they really include the how long it takes to get stopped out or make money on that trade? Do you like sitting in trades where you're not making money, or you're up on the trade and you're like, oh god, I'm still waiting for the target? Like, should I just get out now? You know. Anyways, that's what I'm thinking. So I gotta go back to sleep.